Without further ado, let's start the webinar. For this session, we have Tomoyuki Misumi to share his insights on the Japanese market. Without further ado, let's welcome Misumi.
Good afternoon, everyone. My name is Tomoyuki Misumi of the research analyst of Phillip Securities Japan. Today, I'm talking about the Japanese economy, the Japanese stock market, and what it's called the resurrection. Well, let's share my presentation. Okay. This is my presentation. Japan market review and strategy 2023 toward economic rationale. This title is about the story that the Japanese economy is going to some rational phase. Rational phase means that in the past, there's some irrational aspect of the Japanese economy and Japanese corporates. I'm talking about what's that and how it will change in the next phases. Okay, today's agenda. First one is one Japanese macroeconomic issue and new BOJ governor. BOJ is Bank of Japan, the central banking of Japan, and we welcome the new governor. The name is Kazuo UEDA, and his new appointment may affect the expectation of the stock market. I also tell you why it's called the resurrection of the Japanese market, and how new governors see that the monetary policy and its fiscal aspect. Next one is revitalization stock market. The Tokyo Stock Exchange reform and commitment to listed companies, and also talking about other game changers. Then the strategic application. Tell you the screening condition to pick up the performing stocks, and also how to well diversify the portfolio for analyzing a historical and also gaining the future pricing. Okay, Japan economic and market overview. Why core resurrection? Do you see the chart of this one? It's like a cross section of the volcanoes. Yeah, the highest record was at 1989, 38.9 thousand JPY. Nikkei 2005 is a record highest price, and we never. After that, Japanese stock market never reached the level. The lost decades of Japan after collapse of bubble economy. And what happened? We're talking about that. Sorry, there's a lot of issues. Policy issues in last 3 decades. The start from the Plaza Accord of 1985. There's a market rating starts because for the tapering JPY appreciation against US dollar. And then there's the bubble economy and central banking fear about such a very uprising of the appreciation of asset prices. So introduce the first monetary policy tightening. But this is a failure of soft landing. So the continuous dropping of policy rate happened throughout the 1990s. So after the crash of bubble, there's a credit crunch and the large balance of banks non-performing loan appeared in the throughout 1990s to the early 2000s. There seemed to be almost 1 trillion JPY. Non-performing loan related to the real estate investment of household and corporate. Yes, there are many guys are investing in real estate, and real estate price is also collapsed after the collapse of the bubble. Yeah, some corporates try to gain the investment return from the real estate than their normal ordinary operations. So this may have also hit the bank balance sheet, and also some security firm try to be healthier by using some off-balance transaction. then a sudden shutdown of the Yamauchi Security happened in March 1998. This is the Lehman shock of the Japan. After that, it was very a long time of the deflationary economy. And also the interest rate dropped into the liquidity in the zero level. It's called a liquidity trap. So that's kind of the long-lasting unperforming field. As there's a sentiment to the request the central bank that no longer back to monetary tightening. So this is irrational aspect of the Japanese macroeconomic policy. So BOJ governor last 2 decades, Masayoshi Shirakawa is the former BOJ alumni and ex-deputy governor. So BOJ governor have the leader appointment rule, BOJ alumni and Ministry of Finance. But they are trying to change that, but actually he's BOJ alumni and the town raised to the promoter from the ex-deputy governor. His tenure is from Lehman shock to 3 March 11th earthquake. His policy is very scientific. Policy respective of GDP gap and total factor productivity. He's conservative about the productivity increase, technological progress, and so the potential growth rate is also concerning. But his approach is very logical, but unclear and difficult to interpret for many of the market participants. He also introduced some untraditional monetary policy because of the appreciation of JPY against USD after the earthquake. This is because of the repatriation of the some insurance companies. Then it's time to the Mr. Crothers, the former Asian Development Bank governor. In the first appointment, other deviated from the relay appointment rule. He applied the explicit inflation targeting to 2% inflation and conducted the unprecedented scale of the quantitative easing. His approach sounds like a monetarist at first, but turned to be policy respective interest rate, like negative interest rate policy and YCC. But it's combos of the flattening YC yield curve and negative interest policy rate is bringing the bank sectors. Then it's almost 10 years of tenures, and he's also so old guys. So we appoint the next new governor. So before I talking about the new governor, Mr. Kazuo UEDA, we're talking about what the yield curve control and continuous limit purchase. The YCC is a controlling yield curve for targeting shapes try to control the longer term interest rate over 10 years. It's also conducted in the conduct of explicit flattening inflation targeting. And continuous limit purchase also introduced. It's an operation that unlimited purchase of specified maturity of the Japan government bond until it reaches the target yield. There's a skepticism and critics may end up in holding this first maturities of JGBs. In the past of the US, it was applied in the World War II, but it ended up in such a result. Unfortunately, there's some discussion in the JGB holdings, maturity of JGB holdings, the BOJ, but it's not devastating. It's still linked to the short term because we introduced the YCC after flattening the YCC, after flattening yield curve. And also skepticism and deficiency of JDB may repress money market. And also it's actually a direct financing of government by central bank. Let's move on to the Kazuo new governors. He's the first BOJ governor with PhD of macroeconomics. He had a PhD at MIT School of Economics. Before inauguration, he expected to be hawkish, might start tapering of quantitative easing and termination of yield curve control. Also also expected to dispose the ETFs that the BOJ holds. He made skeptical remarks about effectiveness of quantitative easing when he was a policy committee of the BOJ in early 2000s. But after inauguration, he turned to be dovish, deny upcoming termination of yield curve control, also suggesting about the keeping holding of the current ETF, no specification of the policy exit date. And he also said that the headline inflation above 2% is not single criteria to end the YCC or the monetary easing policy. He said that the real inflation may coincide with nominal wage increase in the last ECB conference. I see that there's a hidden theme. FDPR view is about the fiscal theory of price level. He's seeing the monetary policy as a fiscal matter. Continuing low interest rate policy for stable government financing. That's important for the stable inflation level. Also concerning about the clarity of monetary policy. Don't make the same mistakes about Mr. Shirakawa did. So what's the fiscal aspect of monetary policy? There's a fiscal theory price level in that credit worthiness of legal tender currency is determined by the financial health of combined entity of government and central bank. It means that the central bank merely a subsidiary of government, and central bank issue the currency. It's a non-interest bearing debt, and central bank purchase by issuing such a non-interest bearing debt to purchase the interest bearing government bonds, and its income is ultimately returned to the government. So the combined financial position health is important. It's the background of the creditworthiness of the currency, the central bank issues. So the financial position of central bank alone may not be the problem. So, but the financial health of the government is important. Continuous refinancing of the U.S. Japanese government is very important. So supporting it by lowering the interest rate is, if the interest policy rate turned to be high, it's turned to be JGB. It's turned to be the taxpayers' burden. So he's caring about the unsustainability of the refinancing. So my prediction: BOJ keep policy rate low, stable the financing Japanese government. New governor will manage to take soft landing of current YCC, and he's huge. And he will talking about the posted government tax reform. Now the Japanese government has the deficit of the most doubling of the GDP. So let's move on to next. Now start talking about the JPX reform of the Tokyo Stock Exchange. The market section revision occurs. There's a first section, second section, mergers, just tax, standard growth. It's very ambiguous. Now simplify to the prime standard growth. Its criteria is market cap and liquidity. So, but there's some and we still have the ambiguity about the prime and standard. But if the company turn to the prime from prime to the standard, it's a degrade. So Japanese company fear about such a degradation. So in some border company try to meet the market cap and regulatory criteria, it's time to be it forced the company to change their market cap is performing. Also, there are PB 1.0 problem. So ask below BB. So the stock exchange JPX also asked the companies below book value to alter it. The foster the return to shareholders. There's no upcoming penalty if the company below the book value, but fear of possible delisting also forced the company to alter and raise the PBR. So in the background, the corporate governance, the corporate governance issue of Japanese companies. There's a protective financial policy. There's a rather accumulation on retained earnings. Even dividend-paying companies have lower PBR. It's surprising. Then they are keeping enough retained earnings, then paying the dividend. So the lowering price with high dividend turning into a high dividend yield. It's not good. Also, have companies have taking cross shareholdings, having each other of the share its stocks. Also taking takeover defense is also applied in some companies, and there's a low independence of directors. So the reform of Tokyo Stock Exchange may force the listed company to change their attitudes. Now the other game changers, maybe the first one is the primary reason of the current uprising of the Japanese stock market. Chatbot and generative AI. There are many semiconductor-related companies in Japan, and the largest foundry in Taiwan, the TSMC, established the Kumamoto factory in the southeast region of Japan. Lapidus, it's a newly created company with cooperation of 8 prestigious companies of Japan, foreseeing a 2-nanometer processing of the next generation. Warren Buffett visited Japan. He is suddenly visiting Japan and talked with the executive of a major trading company. The trading company is not stock exchange. It's a kind of trading company like the petroleum, food, and any kinds of transaction. And also comment that the PBR is not single criteria. His visiting give the assurance of the quality of Japanese company, that they are actually good. Having price increase in Tokyo area after Corona is also have the income effect for households. Some kind of having rich people have more income from selling the house, selling the rising price house, then affordable to buy assets. Okay, let's talk to the investment strategy and security selection. Assumption is that so I'm talking about that BOJ still will continue low financing, low interest rate policies for a long period of time because there's some fiscal issue. So I see that the Japanese company also enjoy the low financing cost. So they have it is a room for the Japanese company to alter the capital change. Also, but assume that the PBR can increase by financial leverage only when profitable and efficient business. So potentially above book value companies can be found in performing ROIC, return on invested cost. Leverage and cost of equity is a trade-off. The betas method. The beta means the co-movement of the stock price, individual stock price, and there's a benchmark like Topics and Nikkei 225. So if the company try to increase the financial leverage, but cost of equity also rising. So there's a trade-off. So I make some screening condition. IR finance English. Yeah, I was talking about the largest obstacle in investing in Japan is the language. So many of the materials in the investor relation is in Japanese. And almost 40% of listed company don't have enough investor relation materials in English. So I have to screening that there's at least financial reporting and business description are available in English. But formal form 10K is unavailable in some company. And even if some summary of financial reporting and business description, it's available. And cut of market cap 300 billion JPY. And also cut of gross margin under 30%. Or if gross margin is unavailable, operating margin under 20% is also at cutoff. So it is from the assumption that only the performing company can increase the price book ratio. So there's a ROIC cutoff condition. Positive ROIC spread greater than 5.0%. Try to incorporate low PBR Japan listed company. Ideally, low beta less than 1.0, cutoff more than 1.2%. So I have to say that investing in Japan is very risky. About the standard deviation of 14% of the 1 year annualized standard deviation, it's a risk. Even though the straight time index have annualized standard deviation is 10%, around 10%, it's almost 4% riskier than the straight time index. So I have to talking more about what is the return on invested capital. The definition, the operating asset return belong to both equity and debt holders. So how company investing in operating asset and how much the return rate. The definition is that the taxed operating income, net operating profit after tax, divided by invested capital. So the ROIC spread method, what's the ROIC spread? Is the ROIC minus weighted average cost of capital. The WACC, or called WACC, weighted average cost of capital, is a required return that all investors expect to the company. So this difference, the ROIC minus WACC, is excess return belongs to all investors. Also, it's a return scale of the economic value added. So if this measure applies, may find a hidden performing company even if they have the low PBR and ROE. Okay, there's a screening result. Now, finally, drops low PBR. In my screening condition, there's no low PBR company. Also, unfortunately, the silicon semiconductor industry drops. Banking sector, industrial sector belongs to these global uh, global sectors, GCIS. So multiple sectors incorporated, and also with different size of market caps. The ZOZO, Chugai Farm, Nintendo, USS. Maybe it's familiar for me, for all of them. Japan Tobacco, Tokyo Seimitsu, Zenkoku Kosho, this is financial company, and Kakak.com. I also tell you detail after that. Okay, this is this function. This is very surprising gross margin rate. It's very good. Operational margin is also above 20%. ROIC spread is very good, about 5%. So I have some compromises about the beta screening. Tokyo Semis have 1.01 betas. But I felt, so I tell you the detail. Back to bit from camera, sorry, we regret, sorry, okay. Yeah, the other, ZOZO is the largest fashion e-commerce platform. It's targeting all range of price of the apparel, from cheap Monday to luxury, and also any range of the customers. Chugai Farm is a pioneer and the largest market share of the therapeutic antibodies. Nintendo, you may know that. The console gaming device producer and also the platform of game titles. Nintendo Switch. It's almost 7 years after release. There's maybe surprise that new console introducing new console, maybe a surprising, may have a surprising return. Okay, next one. So also USS is a large just auto auction platform in Japan. There's some there's an auction of the second-use car, second-use automobile. Also about the Japan Tobacco, the consumer staple conglomerate. This main product is cigar. There's many brands and food and pharmaceuticals. Tokyo Seimitsu, over semiconductor company left in my portfolios. Semiconductor manufacturing equipment, precision measuring instrument for various usage. Next one, Zenko Kosho. It's non-bank housing loan guarantors. It's almost this company is in the monopolist position, and the only non-bank guarantor among us, though other competitors have the financial companies. And Sankyo, it's a amusement machine vendor. Sorry, this is amusement machine vendor of pachinko and slot machine. Pachinko is kind of Japanese gambling machine. It incorporates any kinds of the animation and game characters. So even if people with no interest of the gambling, the fans of the such gaming character and their animation and the manga character praise such kind of the amusement. So they have competitive position in this sector, in the consumer staple. And Club.com is the largest C2C review platform. If you want to find a nice restaurant or some the best price of purchasing something, you will see this Kakao.com, this platform websites. Then I have to explain why exclude the silicon semiconductor industries. I have no intention to exclude SSI because I mentioned that the generative AI is one reason that the stock price rises, stock price reduction of Japan, but there's some common problems. High beta ends up in negative lower ROIC and always spreads. This company has high betas, then turn into the high capital cost, so the negative ROIC and the always spread. Also, there's a big problem. Minimum investment. It's expensive, more than 1 million JPY. In Japan, there are the unit stock rules. Minimum 100 stock to purchase. So every stock price, every minimum investment, 100 multiplied by the current prices. So it turn out to be 1 million JPY. And also, I find that many companies have high gross margin, but low operating margin. This may be because of the product mix. Mild conglomerate discount, I call it a mild conglomerate because there's a synergy among many products in production. But if you try to selling it, there's some inefficiency of the operating practice, selling practice. So it may find a decreasing return to scale. Also, high bet also work buffer no risk. Topics is riskier than STI. Explain last. So I also introduce you the performing semiconductor industries dropped because of high betas and unit price. So you can find that a lot of gross margin. I see the whole corporation maybe some mistakes in, but the operating margin is reasonable. But you can see that there's a high betas over than 1.2. But and also unit price is higher, and some of them are dropped because of market capitalization. So, but I have to say that the Red Tech is very it's very performing company because the Red Tech produces instrument for extreme ultraviolet lithography to the ASML. ASML is now cooperated with NVIDIA, Synopsys, and the TSMC. So the Red Tech instrument directly related to the NVIDIA GPU. So it's closely related to the generative AI and the data center GPUs. Okay, let's move on to next. So portfolio construction and investment rule. The objective is clear. Create well-diversified portfolio that outperform benchmark. Apply mean variance approach. It is kind of textbook. So benchmark is topics, not Nikkei 225, because Nikkei 225 is the averaging of the stock price, no market capitalization. So topic is better proxy for the average return of the Japanese stock market. I make the discretionary allocation, but each of the stock allocation is less than 20% of the portfolio. The affordable, so that under the 5 million JPY in initial investment. So I see that the participant, many participants is retail investor. So I decided that under 3 million JPY, 5 million JPY is suitable for the participants. 1 year of investment horizon with no rebalances. So you don't have to care about the portfolio weight changes because it's a minimum investment. No flexibility of changing the weights. So the first day of the investment is the first day of July. No dividend reinvestment. No short selling and leverages. Only buy and hold strategies. using historical approach, last 12 months price return and annualized risk for 247 trading days, begin July 1st of 2022, ends in 2023. This is historical approach. It's kind of backtesting. So these are begin prices and unit stock. I have made a discretionary waiting for ZOZO for 200 stock and leftover 100 stock. It's minimum investment. Then portfolio weight is like that. No stock exceeds 20% weight. And beginning value is like that. So portfolio beginning value is 3.1 million JPY. Diversification grants is very surprising. You can see it's a lot of. You can see that there's a correlation coefficient. 1.0 is a max, perfectly correlate this. You can see that there is only Kakaku.com and ZOZO correlate is half, 0.5, and the leftover are like perfectly uncorrelated, 0.1, 0.2, and 0.3, and 0.4. So I successfully diversified its risk. Note that the correlation is coincidence of up and down movement, not a trend. Even if some two stocks have the same trend, but up and down movement in the different timing, there's uncorrelation. These are uncorrelations. Let's move on to the historical performance. This portfolio successfully outperformed the topics in the last 12 months. You can see that this is blue line is my model portfolio. Outperform orange topics line in every period. It's very surprising. And the risk is still higher than topics. Its model portfolio have 14.70%, but efficient in terms of Sharpe ratio. The return divided by risk is like that. 1.37 in topics. Topics is really good performing, but model portfolio is better. 5.41, 1.54. So historical performance is this is total results. Okay, start with beginning value is turned to be 3.1 million JPY is turned to the 3.9 in the price million in the price return. Also incorporates dividends. The total dividends is like that, and the return driver is the Tokyo Seimitsu and Sankyo. Also pay good dividends in Tokyo Seimitsu. So the total ending value of this July is 4.0 million JPYs. Okay, but this is the past. This is past simulation. So we are now caring about the what's happening in the future. If what's happening in this portfolio in the future. Future scenario analysis. We don't have the individual stock analysis in this in our research entity. So I substitute the target price of the coverage analyst of the other firms. I use the consensus price. The median of the coverage analyst price is at the normal scenarios. Highest and lowest of the target price as optimistic and pessimistic scenarios. And so comparing benchmark return is the 5-year average annualized topic return plus minus risk standard deviation, one standard deviation is 68% confidence intervals. A topic upper and lower limit return as optimistic and pessimistic scenario comparable one. So I also think about the last year risk structure is also inherent in next 12 months. So the variance and covariance of each stock is the same in next 12 months. Investors' rule is almost same, no rebalances, for the same portfolio, so that the unit stocks of the its company is the same. Just portfolio price changes past prices because of the past price appreciation and depreciation. So let's see the first condition. Sorry, before that, I have to see how the other analysts seeing about these companies. There's a number one analyst. How many analysts see that buy, outperform, hold, and perform sell recommendations? So there's a dispersion in the number of coverage analysts. One of the performing companies, 3Q, is very fewer analysts. Also, Nintendo is very strong by recommendation. So so there's a targeting price. The 3Q is really good, highest targeting price, but it's less creditworthy because few analysts covers this company. And Tokyo Same is tying to the dragging rates of the portfolio. So comparing to the last 12 months, so performing company maybe Sankyo and Zozo and Kakaku.com in the optimistic scenarios. In the median scenario, there is the Zozo, Sankyo, and Kakaku.com. Also, Dengo Kosho is very good performing company. So here's the performance scenarios implication. We see that this is the possible return of these scenarios. This scenario turning to the 5.4 million from the 3.9 million JPY. In the median scenario, 4.26 million JPY is total return in price returns. So in simulation, in the optimistic scenario and median scenario, model portfolio outperform in terms of both price return and also in the Sharpe ratio. But in the pessimistic scenario, there is a underperformed topics. It's a little bit devastated than the holding topics. Okay, future performance of the total result of the median scenarios. A future analysis. So the first investment is 3.9 million, and down into the price gain of the 4.2 million, and the best performing company is Zozo and Sankyo. And next 12 months total return with including the dividend, it's 4.13 million, 4.3 million JPY. So it's very, I think it's very performing than having the topics alone, and also better than having its stock alone. Okay, it's a little bit quicker than the planned period. I have to say some concluding remarks. Talking about some irrationality of past Japanese markets, there's some sentiment and try to foster the BOJ and the Japanese government to foster the monetary easing and also expansionary fiscal policy because of the failure of soft landing. So, but from new governor of the Mr. Kazuo UEDA, it turned into its rational, back to rationality, backed by the solid macroeconomics theories and practice. So investing in Japan is to better pay the transition to economic rationality. Economic rationality is a kind of predictable and sustainable macroeconomic policy backed by economic theory. And corporate governance reform with shareholder first. So Japanese company will now turn to care about the US, England-like corporate governance practice, and also increase the shareholder back, and also seeking further capital change into capital efficiency and the divestment for the unperforming business branch, non-synergy creating branches, then and restructuring, reforming of the sectors, and now then going to the more performing companies, more performing stock markets. This is our stories. Thanks for listening.